Hi, it's Keith. I made some progress with my backtesting project here, and I've got 4 different scenarios that I've sort of run a test for going back to February 1st of this year. And I'm just using some data from TradingView that I've loaded into Excel and done basically an Excel backtest. So today I just wanted to kind of share that process, explain so what's possible just using TradingView and Excel. I'll also kind of compare and contrast that to the method that I think I explained in the last video, sort of the prior method I used with OptionNet Explorer, and kind of show the difference of those two kind of methods. So I'm going to go quickly through a number of different topics. All of them I'd love to go into like a really extensive detail on, but it's just going to be too long of a video. So I just want to kind of mainly cover sort of the backtesting approach piece. So in terms of TradingView, I mean, the key thing here to just understand is I've got 2 data sources. So I've got the S&P 500 E-mini futures, and this is what my indicators are all based off of. And even though I'm trading XSP, you can see XSP has these sort of gaps, right? Gaps at the open, and there's missing information here, right? Because when we go from the close, at 4 p.m. the prior day to 9:30 a.m. the next day, we're missing out on all this great information of what the futures did overnight. So again, my indicator is using the futures. A little bit unique, right? Normally your indicators are plotted on the chart of the product that you're trading. So that's not the case. So that's one thing to be aware of. This backtest here involves 2 different data sources, right? So I've got the ES futures here. I'm not using any of the price information from this chart. I'm just using the indicators. So for the opening range breakout, that is a trading signal. So I've got a sell signal and a buy signal. And those signals are basically going to inform the bot to actually make a trade. And so what I need in the Excel file that I'm going to extract is the dates and times of when those signals were given, because those are going to be trades that I need to kind of simulate from a back test. Okay. Then we've also got my trend indicator against 2 different signals coming from webhooks here, the bearish indicator and the bullish indicator. Those aren't trading signals, so those are going to work more like, they'll inform the bot of what the current trend is. So in that case, what I want to see in the Excel file is going to be, for any point in time, what is the trend, right? Are we in a bullish trend or a bearish trend? And so again, 4 pieces of information that are plotted on my chart that also I have alerts set up that are informing my bots to take action on. And we're going to see the 4 kind of pieces of information also come through in my Excel file as well. To be able to export from this chart here or any TradingView chart, just using out-of-the-box functionality to be able to kind of export the chart data. What you're going to see is we're going to get everything that's on this chart, right? So not just those couple of indicators that I wanted to use. We're going to get all the price information. Again, every candle, the open, high, low, close is going to be captured. Any point, we've got our range lines here for our opening breakout range, our sort of high, low, and kind of midpoints here plotted. My upper range of my trend indicator are all kind of, those lines are plotted. Volume information, everything that's on this chart is going to come through in that file. For the XSP, I'm just using a blank chart. All I need is the price information. From here, we just need to know what's our price at the time that we're making our trade, and the price of XSP, and what is the price that XSP closed for that day. So all that information will come here. Again, they're both on the same frequency. That's important so that I can match the data against each other. I've got 15-minute data for XSP and 15-minute data for the futures here. When we export, you're going to need to have a paid subscription, and you're going to need to have a level which allows export. And I'm at the lowest level that allows export, and I'm allowed to export up to 10,000 bars, right? So in this case, I have more than 10,000 bars now of the ES futures. That's taking me back to February. So for me to go back farther, I would need, at the same time period, I would need a higher level subscription. But for me, that 10,000 bars is more than enough. And usually what I do when I need to go back further, then I just sort of make some compromises and just use less granular data for the kind of farther back test that I might be doing. Okay, so let's take a look at what the actual file looks like. So in the first tab here, I've got basically the data that was exported from the S&P 500 E-mini futures, right? So this is the one that just has a whole bunch of columns in it, and it's just because you know, those that indicator is quite complex. Again, 2 indicators on the same chart, and each of them have, you know, a bunch of other things that they're plotted on the chart. Even if you just, you know, if you look at the actual code for that, I think, which one is this one? This is the opening range. So this is from Option Alpha Mat. I've made some modifications to it, but it as it was received, is quite a complicated one in terms of the amount of data that it's got. I mean, a lot of these are actually inputs as well, so it's maybe not that big, but you can see how many actual, you know, information that's being plotted on this particular indicator. I'm not using really any of that other than a couple of columns here, and the only thing I'm really doing to manipulate this file is to just convert the date format. So I also want to use the end of candle, so that those indicators that are going to be shown on here, I want the time at the end of the candle, right? That's going to correspond to my trade entry time, right? When I'm going to time those. So again, to be able to link this data with my XSP data, they need to be obviously on the same point in time. And so it's the end of candle here will match the opening candle on my XSP data. I have, so this is the row that this is the file that has more than 10,000 rows in it. You can see it's pretty large. And I filtered it down. Again, all I really need to know is where are those signals. Particularly, this is going to be used for the opening range breakout trades, right? I need to know when do those trades occur, so we can see there's you know, a number here. There were about 118 actual trade indicators here. I've captured again the trade signal and also my trend at the time of that signal. Because I've got a couple of different test scenarios here. I'm testing the opening range breakout by itself, and also testing it, you know, whether we also have the trend in the same direction as our opening range breakout. Again, time is here. Again, just allow me to kind of match to my other file. Here's the XSP data. So this one actually has very few columns that actually came from TradingView. The rest has all been added by me. There's no other data source. Nothing's been manually input or added here. This is all formula driven, and it's basically what it's doing. Again, working with the date formats again. Everything here is going to be in UTC -4. So again, both of those exports. That's just the time that was set in TradingView. That's currently the New York time zone, but it is UTC, so it doesn't adjust for daylight savings. So like some of these dates that you see here, that I'm able to identify again what is the opening candle. So that green date here, 10:30, that is the opening candle. That is the you know, that's actually 9:30 local market time. But here in UTC -4, it's again not adjusted for the change in the time, and a candle here at 5 o'clock. So again, a bunch of information I'm adding, just more for I need to know the closing price, so I want that on the same row. So anywhere where I have a kind of a trade signal, I can actually capture, again, what was the price at the time that I'm making that trade. I'm using the opening price there, and I'm calculating the closing price, just basically finding it in this spreadsheet. Where is the actual you know, closing price for XSP. This stuff off to the right here is just basically identifying my back tests, right? So I've got 4 different scenarios that I'm testing. Again, everything is formula driven, but I've just kind of coded the formulas to sort of based on my trade entry criteria that I've defined for the different back test scenarios. And the color coding here, I've just got 4 different colors just associated with my 4 different backtest scenarios. So I just sort of know, you know, where those trades exist. It's easy to find them. And I can see here, like the purple rows are the opening range breakout test scenario. We can see we're getting multiple signals here, and it's just the actual strategy here that I've identified is just this column here is just only count the first one. So the formulas are smart enough to know that for none of these scenarios, I'm not going to open more than 1 trade in a day. So for that scenario where we could get multiple signals in a day, we're just taking the first signal. Again, the color coding is just something that's helpful for me for a visualization. I can see, here's the open range breakout. I can see some days it's really close, comes kind of near the open. Sometimes it's later in the day. I can kind of visualize it on this chart here as well. So that data is, again, just all formula driven. Rather complicated, but if you're good with formulas, it's quite easy to do. Again, all this, even the color coding, it's all like conditional formatting and stuff. So nothing has been sort of manually edited here. The columns that have yellow, these are ones that are relevant to my actual back test. So that data will then be used either in the calculation of the back test or in kind of the reporting, right? So there's some information like time from open that I've captured to kind of do some analytics based on, different metrics based on, at what time the trades were opened. Obviously, the different scenarios that are represented and what the trend was is all relevant for how I'm sort of presenting the backtest results. So this data, again, those yellow columns, it can kind of get moved forward into another sheet here, which are basically the trade log, right? This is my sort of an accounting view of the actual trade details here. And so these first few columns are just coming from that first spreadsheet, and I've got some information that I'm adding, which is basically the columns used to kind of calculate the outcome of that trade, right? Was it profitable? What was the P&L, win or loser, that kind of thing. And then I've got a bunch of columns here more for the reporting and the metrics used for analyzing the backtest results. So things like concurrent losers, concurrent winners, counting those up to see 16 concurrent winners. Wow, I had no idea that that's even possible, that we could have 16 winners in a row. And it is, yeah. These are all winners. I mean, part of that includes partial winners where we didn't get our full, 100% profit. But, that is interesting, right? So the calculation, I mean, it's pretty simple, just to explain how it's actually calculating. And on this should work, again, for any spread held to expiration. Maybe I should probably explain the trade setup first. That's probably an important reference here. So the backtest, all of this data below here is just, again, pulled from that spreadsheet we were just looking at, right? So, okay, so when I said that this spreadsheet doesn't have any other data sources, the only source would be some manual inputs here. And most importantly is going to be our model trade, right? What is the actual backtest using to calculate its P&L and to calculate its win rate. And it's quite simple here. I mean, I know what the trade is because I have an existing bot, and I have that information available to me. Not just knowing, okay, we've got a directional credit spread, either bullish or bearish, with our short strike centered right at the money, and our spread width is always going to be $3 on XSP. But I also have taken from that bot, from my kind of live experience, what is the average credit received. So again, that bot is trading 4 contracts, and I'm on average exactly $400. So this isn't even rounded or anything. That is my actual average credit. My max loss, I think, was slightly better than this. I think my risk reward was like 1.97 or something, but very, very close to this. This max loss and risk reward, again, is just calculated, again, with $3 spread width and $400 for 4 contracts. That's going to be our max loss and risk reward. And again, consistent with our my live experience, but slightly different. Now, this is where we're going to have a potential difference, right, of this method versus actually testing with real options data. So we're always going to assume that we're always going to get $400 as our premium received. Every single trade. That means any 100% winner, we're always going to collect $400. Any 100% loser, we're always going to lose. Our max loss is always going to be $800. And I just know that's not really that realistic, to always get exactly a 2-to-1 risk reward. So again, my averages are very close to this, But the bot also does have some logic. It excludes certain trades if it doesn't get the risk reward that it wants. It makes some adjustments. It'll move a little bit in the money to be able to get a better risk reward when it can't get the risk reward that it wants. And its maximum, it will not take a trade for anything higher than a 2.5 to 1 risk reward. So we'll look at some of these trades. We'll actually load them in OptionNet Explorer and see actually what the real premium will be when at time of entry for some of these trades. And the account sizing here is just so that I can calculate some values like my P&L as a percentage of an allocation and max drawdown. They're going to be just driven off of this number. And so that's it. Let's go back. Let's just explain the calculation now. I was even surprised that, it's something I've calculated before, but even putting the spreadsheet together, I just sort of forgotten how simple it really is. But we only really need two pieces of information, right? We got price at entry, price at close, and that is for XSP. So any price related information here is a reference to the XSP product. Again, that came from that chart that I showed. And so if XSP is trading at 487.59, we need to just determine what our short strike is, because that is actually the reference point for calculating our P&L. Isn't the price at entry? We're actually going to use like a real, what would the most likely strike be? So we're going to round it to the nearest kind of at the money strike, right? So XSP has strikes every dollar, so we just round it. We're going to round to 488. Now that's a bit of a question mark, right? Is that really going to be where our strike is set? In this case, we're rounding up, so we're going from 487.59 up 40 cents. That's a pretty big difference. That's going to have an impact. This is a bullish trade. So we're going in the money 40 cents. So we're going to get probably a better risk reward there. And in the money, so lower probability. But it's changing our risk profile, right? Than one that maybe if we didn't have to round quite so far. So just something to be aware of. That is that limitation, right? When we said we're always going to collect a consistent premium received. Yeah, I said on average we're collecting $400, but I don't know what the range is, right? I don't really know. So it went up in value. We know the price and close, so we can just calculate our price move to the short strike. So that's again how far in the money did we go, or out of the money, I guess, and depending on the direction. So this is just basically subtracting the short strike from the closing price. So again, positive value means it moved up. In this case, this was a bullish trade. It moved up by $2.62. That's how far it was above our short strike. In this case, it doesn't matter how far it's going to expire worthless. It is a 100% winner. So pretty simple calculation, right? If we have a partial win like this one here, 28 cents, this was a bearish trade. The price moved up, which was not good for a bearish trade, so we are 28 cents in the money, and it's going to use that 28 cents. That's how we're going to calculate our value at close. So the in the money value at close here, it knows whether it's a bullish or bearish trade, so it knows whether a move up or down is going to be in or out of the money. It also knows that when we're out of the money, then that is basically a zero value at expiration. And when we are in the money by $3 or more, then that is our max risk is actually $3. That's our spread width. So it will just take $3. Let's find an example of a $3 one. Here's one. $3 loss. It had a price move of $4.42. That's a bearish trade, so it's above our short strike by $4.42. It's going to calculate the closing value as $3. And again, the calculation here, we're just taking our value at expiration here times by the number of contracts times by 100, and then adding back our average credit. Again, our average credit is at $400. So pretty simple calculation. It's all built in. So that's obviously the simplest version is a directional credit spread. We've only got one side to worry about, but the same logic applies if you're calculating for an iron butterfly or an iron condor. You just have two sides to do the calculation for. So also in this file, I've got like 4 different scenarios represented here as well. And they're all, basically just all in the same file. That allows me to just kind of query from one place and chart the data against each other. And I think let's look at the opening range breakout, maybe just to explain the differences too as well. So I've got the first scenario is just using the trend indicator. So it's just taking a trade every day at 9:30 a.m. right at the market open, evaluate the trend and open a position in the direction of the trend. Same thing, doing the exact same thing, but just 30 minutes later. The opening range breakout, again, that's that signal that's received. I've categorized it so bullish confirmed and bearish confirmed just means those are basically opening range breakout trades where we've also evaluated the trend and the trend is in the same direction as our trade. So in this case, we've got a bullish confirm means it's a bullish opening range breakout and the trend is also bullish. Bullish unconfirmed means the trend is bearish, but yet we received a bullish opening range breakout trade. So this first scenario is ignoring the trend, but you can see I've kind of broken it out so that I can see what the difference is. And actually, interestingly, there's 6 trades here that are unconfirmed trades, and they, I think, all were 100% winners. Yeah. So it looks like confirming the trend is probably not the right approach, because here's the result of actually if we exclude those 6 trades, this is going to be the outcome. Again, we actually have I think this is the worst of all of them. Not worst in terms of drawdown, but worst in terms of estimated win rate. Okay, let's just go to the bottom here and let's just find some recent trades. And I just want a mix of winners and losers. So I can't pick this most recent trade because OptionNet Explorer doesn't have the data for that one yet. And again, that's just the most recent trading day. Let me go to 100% winner, a partial loss, 100% loss, and a partial win. Just pick those most recent ones. Yeah, I guess we could just filter. We could just filter on those. Okay, so let's take a look at this first trade here. I'm just going to mark the short strike there at 562. This is going to be on the 12th of July. And I'm going to move this to my other screen. I'll bring it back to just show you what I'm referencing here, but just going to navigate to that date, the 12th. Okay, and we're going to put in XSP. And just go to our time here. $10.15. We just want to make sure. So our OptionNet Explorer, it marks your at the money strike in red, so we can just say that actually is the at the money strike. And our price at entry is 561.60. We got 561.73. We're slightly off. I think it's just a difference, and this has data every 5 minutes, so this is sort of a price data coming again from a different frequency, and I'm not really sure why it's different. This is 15 minutes. This is sort of the open of the 15-minute candle. This is the close of the 5-minute candle. So it may actually just be off by 5 minutes potentially. I don't know, but close enough. We're close enough. So for all intents and purposes, it should be good. I have noticed the price at close does looks like it always ties out, so that's not a concern. Let's put our trade on here. This is a bullish trade, so we want puts. I'm going to just sell the short strike here, 562. 4 contracts at 559. There's our credit spread. Again, looks okay. And we're not getting $400. We're actually getting $348. Let's just calculate that. 852. Is so we're below 250, so I think that's acceptable, kind of within range. We'll see. Hopefully we get some that are higher than 400, and that's gonna, these all should average out in the end, but we're gonna commit this trade here. Just put in just a reference number 1 so I know which trade it is, but we know what it is because the time. Just double check and make sure I got all the dates and everything right. Yeah. Okay, so here's one of the value of this tool. We can actually see what our bid and ask spread is here when we're taking the trade. Obviously, as we're setting it up, we know what our delta is and all that kind of stuff. Are we at a 50 delta? 54 to delta, so yeah, that is definitely the right strike. I'm going to save that. This is showing me, again, this looks like a very profitable trade, but did have some losers, and we're counting it as a partial win. So let's see what the outcome is. It looks like it, I mean, certainly gotten very near 100% profit, so I'm curious what actually happened. We're just going to navigate now, just going to move on 15-minute increments just to kind of get close, so we can see it's moving up in price. We're profiting. Now it's moving down. Wow, near max profit at 145. Our underlying here is 565.48. Let's look at this one on the actual chart. Gonna zoom out and kind of go, what was that, the 12th? Have I got the right date? No, that's the 11th. Okay, 12th. Here we go. There's the buy signal. Yeah, I wasn't even reading the right signal. Okay, so there's the buy signal. It moved up, and then here it dropped at the end of the day. Okay, well, having two sources of information sometimes is helpful, right? When you're backtesting like this, again, I've got my chart backtest method, my eyeball on a chart. I got my Excel spreadsheet here. I can see exactly what I'm calculating. I'm expecting here to get pretty close to $200 P&L. Our risk reward is close, so yeah, we should be pretty close to that, right? Let's see what happens. Wow, that's just impressive. You can see what happens, right? How quickly the market can turn. Let's keep going. Go quickly. 3 o'clock, 3:30, 3:45. 4 o'clock. Wow. Okay. But this is okay. So when I see this red dot, okay, that's red just means we're negative. It's saying we've got a loss of 178. This is calculated on the options prices. Let's see what our options are. Short strike here has got a bid of 6 cents and an ask of $2.58. So there's some bad data there. It's not bad. It's real data, right? You're going to see that in the live market as well. These kind of wide bid-ask spreads. At the end of the day, we got our long strike here is out of the money. Again, it's kind of showing that with some residual value, but essentially zero. So it's just a bit of an issue because I guess because of that big price move, it happened so quickly. You know, somebody still had an order hanging out there at $2.50 trying to get filled, but it moved too quickly for them. So here we are. We can kind of see. Also, this it's really, unfortunately, the font is really small. I don't know if I can do anything. Let me just maybe capture a screenshot. I'm just going to screenshot that sucker. I don't know how much of it I need. It's just. Okay, this should allow me to zoom in. Okay, so we have here, we've got a this dotted line here. This is our break even. Okay, so we're above our break even, so we should have a positive P&L. So it's showing a negative P&L, and if this is our line, we should probably intersect here somewhere. Okay. That dot at expiration always should be on our P&L curve at expiration, right? These again, it's a vertical spread. That line never changes, so it's going to be quite accurate. When I see that my closing price here is not on that line, then I know that's not a real price, right? That is what I call kind of fake pricing. It's using a wide bid-ask spread, and it's not the correct way to calculate the price. Unfortunately, like my spreadsheet actually does have the correct calculation. So where are we? We're here, probably definitely not at 50% profit, but somewhere between there, maybe 30% profit. Just a guess, just kind of visualizing it. So let's get rid of that. We're at 4 o'clock. Let's just commit this trade here. We're going to put in our closing order, commit it. I have a spreadsheet, so I know what the actual correct closing price is because we calculated that, right? So it is 46 cents, right? So that is the true, our strike price is 562. That's what we got here. That's our short strike. Our price at close is 561.54. That is right. So the data is correct. It's using the wrong source, right? It's using the options prices to derive its price. And unfortunately, I'm not aware of any. I don't believe OptionNet Explorer has the ability to just let a position, go to expiration and then just say, please calculate for me what the value at expiration is, right? So we need to do that manually. What I do when I'm doing testing like this, I'll just run them all through. If I'm holding to expiration, I'll just put in a closing order like this. I'll accept this default, just save it. And then I'll export the data to Excel. I'll do the calculation. Again, all of my inputs, again, I'll always have a spreadsheet like this for all of my back tests. So I'm not just manually kind of keying them in. I have kind of automation that will key it for me from a spreadsheet. So all the data is contained in a spreadsheet, and therefore, so for every trade, I can do this exact same calculation and actually calculate what the actual closing price is. So that's 46 cents. It's minus because it's a debit, so 0.46. We're going to, is it going to calculate my P&L for me? No. So that trade's going to disappear. We'll just have to go and just see what it's actually calculated. Good thing I created a new account so we won't have a bunch of other junk in there. Which one was it? Orb. Okay, so it's calculating a P&L of 164. That's a percentage. Okay, 164. What is my spreadsheet calculating? 216. So it's lower because we collect a lower profit, I guess. What if we do that? Yeah, let's just change this. What if our profit was, what we said it was 348? I'm just referencing, I calculated that earlier, so I think our price was 348, that was the value. Where are we here? 164. 164. Okay, so it ties out. So that's how, obviously this is, we can see how it's calculating. We know my spreadsheet's calculating correctly because the difference obviously is the P&L you're going to get is gonna differ. So let's go to backtest results. Let's put that back to 400. And everything is back to normal. So that's, just shows you how far off it can be, right? So, from 164 to 216, pretty close. I said I thought it was going to be around 30%, just visualizing it on that chart. Let's see what that is, 164. As a percent of our max profit, which, what did I say? It was 348. Oh, closer to 50%. Okay. How far in the money were we? 46 cents. Yeah, okay. Because I've done some analysis as well. I've actually sort of, here when we're in the money, sort of less than, sort of, how did I calculate this? 0, less than 25. I guess between 25 and 50. Our average is still above $200 there, right? 261. So it seems to all align, seems to tie out. I think we're good with that. Hard to when you visualize it on the chart what it's really gonna look like. I thought I was pretty good at that, but I guess I got it a little bit off. It's disappeared now because again we've closed the trade. If we just go back 5 minutes, we're going to see that position again. I guess we're pretty close to 50%. Again, yeah, okay. Maybe I just eyeballed it wrong, but perfect. Okay, so that's the first trade. So we've identified, obviously, our P&L is going to differ depending on what the actual, premium we've collected. When we started this trade, what delta were we at? We were at a 54 delta, so we're slightly in the money. You know, again, to get that 2 to 1, we're going to have to be even more in the money than that. So we might need to be like a 60 delta, right? So, okay, let's do the next one. Let's just bang them out here. So let's see how quickly I can do this. 22nd. This one is going to be 553, and it's this 1145. That's going to be a later one. Yeah, that'll be interesting to see if we get our risk reward on that one. Just again, see how carefully I'm doing everything. It's a bit of a cumbersome tool to use. I'll have to record in the video some points, you know, that people can fast forward and just miss all the boring parts. But 553, that is our strike. Everything looks good there. Last price 553.10, 553.34. So we're off a little bit more this time. But let's put on our trade. This is a bearish trade now. So now we got to find our calls. There we go, 553. That doesn't look like a lot of premium. 1, 2, 3, 4. Okay, that looks good, yeah. Yeah, 386. Okay, yeah, that's about the right risk reward. No concern with that one. Wasn't that similar to what we had before? No, this is much higher. We had 348 the last one. Okay, just to have my history in my calculator just to remember all these numbers. But okay, so yeah, let's put this trade on. We're going to commit that. That's trade number 2. This is a 100% loss. Okay, this should be interesting. Okay, and we can tell right away there's no green dots, so it looks like it was never profitable. Here's where we've got that kind of fake pricing. We got some dots where there's a dot way down here. May not come through on the video, but yeah, let's just see if we can quickly go to the end of the day. I'm going to go backwards and then forward one day. What's the quickest? 4 o'clock and then day plus 1. Okay, another wonkiness, right? This is just again wide bid-ask spread. So 34 cents, 80 cents. So you can see, and that I don't know if this is XSP or if this is you know, going to be regular occurrence, but just holding to expiration like this, we can't trust the price at expiration, right? You can't use the options prices. So actually, we're finding my spreadsheet's actually more accurate, right? So and it does have the right number. So let's just commit this one. Closing trade commit. I mean, you could tell we're a full loss, right? We're beyond that short strike. Very easy to see. Do we need to go to the chart as well? $22nd here. Where did we put in a trade on the 22nd? I don't see one. No trade. Oh, you know what? Okay, so no, this should show it. Maybe it's hidden. Is it hidden behind there? Yeah. Yeah, I got to fix that. They're plotted on top of each other. If they're on the same candle, those two bubbles happen at the same time. So I got to move where those appear. So yeah, we had a bearish trade here, and it just went immediately against us. No recovery at the end of the day. It just kind of went sideways. So okay, so that one we're just going to commit, and we know what the value of that is going to be, $3, right? So I mean, yeah, here we're like $1 off, right? So that's okay. Okay, don't need to look at that one. Next one here, partial loss. The next day, and this is going to be at 10:15. Okay, day plus one. And backwards. $10.15, right? Yeah. Okay, short strike is at 558. That's where we are. We're saying that our price at entry is 557.66, 558.02. Again, we're rounding pretty much to the right number, I believe. You know, that is a 49 delta. So let's just set this one up. This is a bullish trade. I'm hoping that we'll find at least one that gets a better premium. Everything looked good there. I think I got it right. Risk reward 332. Okay, that doesn't look so good. 868. Looks okay on the graph. 261. Yeah. Okay. That's, and my strategy will not enter a trade below or worse than 2.5 to 1. So that's going to be a problem, but we'll enter the trade. We'll just see what the outcome is here as well. Let's commit this one. Let's go back to the prior. Okay, now that I've got a reference point, I've got the last closing order at 4 p.m. so I can just go there. That'll take me right to 4 p.m. and then I can just go day plus one. So I don't know how I did that. That must have been okay. Here's the trade. We finally got to 4 o'clock. That's the end of the day. This is, yeah, partial loss, and a pretty big loss of 572. It's saying that the price closed at 555.57. Where did I see that? 555.57. Yeah, that's the right number. So it didn't move more than $3, so we're not full loss on that. That's exactly what we're seeing here. Again, the dot here is not on that line. It should be up a little bit higher. 572 would be way up here somewhere. Yeah, that's possible. But again, with the poorer risk reward, you know, we're going to have a bigger loss. So let's just commit this one. What was our closing price here? Okay, was 243, 260. And we can see the bid-ask spread. So it's, again, it's, you know, a bid of 221, ask of $3. So you know, it's gone everywhere from you know, somebody's probably put in $3 expecting that, you know, worst case here or something. So we can see the bid ask here is from $221 to $3, so pretty wide range of our spread, and it's probably again just different orders that were left hanging there that never filled. So that one, okay. Do one more. What the heck? Yeah, kind of on a roll. It's getting quicker the faster the more we do. One more day. Let's just go to the start of this one. This is also at 10:15. Okay. Day plus one. What? Oh, I'm hitting day minus one. That's what I did wrong. Okay, Wednesday, the 24th of July at 10:15. Yes, okay. Okay, so this is going to be a good example, and actually this is a bearish trade actually, so we're going to do calls anyway. So actually it's going in the money, the 47. we're rounding down pretty far and getting a 56 delta. So this might be where we get our better than normal, better than $400 credit, hopefully. 1, 2, 3. It doesn't look like it. 362. It's even worse. Yeah, we're never getting that risk reward. Maybe. You know what I could do is run the back test for one of my scenarios, right? One of my 4, and use that average. Don't use the historical for my bot, because my bot is more selective. It's excluding certain trades. It's making adjustments to strikes that this strategy is not doing. So I've probably, my input value I think is off. I think I've miscalculated what my that $400. So yeah, let's commit this one. That's pretty much all we need to do. Did I calculate the risk reward on that one? Is this the worst of the 3? The worst one so far was 348. No, this is not the worst. Okay, this is actually, let's calculate it. Maybe I. Yeah, that's perfect. Oh, that's fine. Yeah, okay. Yeah, maybe I jumped the gun there, but I guess I was expecting to be greater than 400 because we're in the money slightly, but we probably need like more than a 60 delta to get better than a 2-to-1. So yeah, I think what I'm seeing here is that $400 doesn't seem like the right number. I think I've taken it from a bot that has some other criteria that's not exact what the spreadsheet is doing. So that average credit received is not applicable when you're always just going right at the money like this. I think the bot excludes certain trades with a bad risk reward, and it never goes more like this. So this is the first strike in the money. I don't think it would ever go further in the money than that. I don't know. Maybe I need to actually review again what it's actually doing, because it's not matching. Right, I'm not seeing that $400. Right, I'm getting really close, but not close enough for me to be comfortable that it looks right. So this is our 4th trade. Let's just 4th and final trade. Yeah, so no trades did we collect more than $1. Interesting. Okay, let's just try to go there for day +1. Okay, here's our trade number 4. This one, what did we say this one was? The 100% win. So again, it doesn't really matter, right? It doesn't matter which strike we picked. We're going to be 100% winner, it looks like, because it moved pretty far. I don't need to look at that one on the chart for sure. So here it's calculating some really weird value, right? So it's beyond 100% of our max profit. So again, that's not realistic. But clearly the outcome, we know again that this is the right calculation. The value at close should be 0. So we'll commit that one as well. Put that trade to closure here. So it really should be 0. It's just got, so it's got a minus 1 cent and plus 22 cents. So it's calculating a debit here when it should be a credit. Yeah. Okay, so that is it. Let's look at our results again. Let's see how far off we were. We got a loss of $928. This is calculating, pretty close to that. A loss of 756. So, I think we're going to be off here, right? I don't think this is going to be an accurate test. Perhaps if we pick the right average, What is our average P&L? Or sorry, an average credit received. We don't really have it, right, on this sheet. So the partial win was 164, not 216. It was a loss for the 100% loss of 814, not 800. The partial loss was 640, not 572. And the 100% winner was 362, not 400. Let's try that 362. Let's see if that's going to get us closer. I think that's the one I put in before. So now I got 908, which were much closer. So, you know, maybe that's the method. Does that change our result now? Does that change our chart? So not a huge difference. Obviously, we've got it looks a little more not as it looks a little more realistic in that it's not such a steep curve. We can see actually the 931, the blue line, really went sideways before it took off. And the opening range with trend and I guess opening range breakout, those are kind of both very similar, went up while the others were going sideways and then dropped while it was climbing. So interesting. It looks a little bit different. Our reward, yeah, sort of now our allocation has changed because again I've got a different risk reward. This is actually formula driven. It's just 10 times my max risk is sort of what I've used for allocation. So I hadn't planned on changing these numbers, so I thought that would be okay. But yeah, it's fine. So I mean, we've got a higher allocation, so we also got a lower kind of percentage return. But again, more drawdown now. This is looking more realistic actually. And like I said, that is getting us close to what we're getting in OptionNet Explorer. So I think what's happened here, obviously, and that's probably why I'm seeing such good win rate here. So the win rate is obviously driven by the indicator, number one, but also my spread width and the kind of the risk reward that's defined there. These values here of like the how where you can still profit when you're expiring in the money here up to about $1, right? So even if we're $1 in the money, we're still profitable. That's just part of the kind of the risk profile of this particular trade here, and that's not going to change too dramatically. Even if we change some of these parameters now. Let's see what happens if we actually, let's say we only get $300. That's a 3-to-1 risk reward. Does that change this? Yeah, it did. I just saw it refresh. I mean, it's just bigger bars actually, but the break even is still around the $1 mark. Actually, at $1 we're negative, right? Let's put that back to what it was, the $4, 400. Okay, so we're profitable, yeah. So that's going to influence where our profit range is, right? That risk reward. I think what I've done here is I made a kind of a critical error. Okay, so in using $400 credit and a 2-to-1 risk reward, which is actually the average of what my bot is getting, but we saw my actually win rate is about 60%. So again, that's a higher risk reward. It's going to be a lower probability that we're going to win on those trades. And so if we use that risk reward, but then that doesn't match what the trade is doing, so we're achieving that risk reward by going a little further in the money, and maybe restricting, not taking trades when they're beyond our maximum risk reward threshold. What the bot is actually doing is different than what this backtest. This backtest is just always at the money. regardless of risk reward, and probably on average it looks like it's probably that 360. That's probably the right number. What is that? Total P&L is 916 versus our 928. Yeah, I mean that's pretty close. So I think that's a good round number to use here is 360. Now what I'll do is I'll probably run for one of these scenarios, just run every single trade through exactly how it's set up here, exactly all the short strikes. Again, in our trade detail we have for every single trade, we know what the short strike is, so we can set up that exact same trade in OptionNet Explorer, and we'll see actually what our real average credit received really is. I don't think there's any other explanation. You know, we're assuming we're getting filled at the midpoint. You know, we're not going to get worse in OptionNet Explorer, I don't think. So yeah, so that's obviously it shows you the difference. Shows you, I mean, the power of Excel too. Easy just to change some of these numbers, and I can refresh my charts here. Let's look at that 300. I just need to kind of refresh the data here. Then my chart will be up to, wow. Okay, that actually looks more like my current experience. Actually, that orange line. Let's just delete these other ones here. Yeah, I showed in my last video actually what my current bot actually how it performed. It looks a lot like this chart. Actually a little bit better than this because I've now have since recovered back positive again. But interesting, yeah. So it shows you the difference of mix matching your probabilities and risk rewards, and if you get it out of whack, then you're gonna, you know, it's not a very realistic thing. So let's undo that. So we probably, again, shows the importance of making sure that, you know, you put in some, whatever model you're going to use for your backtest, just make sure you're using a sort of realistic number. So here, you know, we're allowing for a max loss of 900, and really the most that we can actually profit is $300. And even at winning at, now our win rate actually did change. And our break-even point again is you know, below $1. $1 in the money. Okay, so yeah, we learned something, and I'm kind of interested about why these two breakout trades perform in certain market conditions better, and they kind of work inverse. Now look at the blue line and the orange line. They're kind of inverse to each other. Okay, so I think I've you know, we've demonstrated two possible backtests. You know, I'm not discouraged, right? I know that each backtest has going to have some limitations. We saw here, obviously, we're dependent on getting the right inputs, right? What we actually input here for our credit received is going to be, let's do the 360. I think I'm going to leave it there for the rest of my testing. And maybe just make this a fixed $10,000 allocation, just so that for all my comparisons, they're all based on the same allocation. But you know, I thought that the first set of data seemed to look too good to be true, and just as we was putting those trades on, it just didn't look right to me. It didn't look to be that 2-to-1 risk rewards. So that's just the nature of backtesting. You know, every test is going to generate more questions, and it's just an iterative process to kind of do more tests to answer those questions, and ultimately you hopefully find yourself with no more questions, and you have sort of what is a sort of a final test. And again, it's still just a test. Past results don't predict future results. So for me, you can see here how much I'm learning about how my trades operate. If this is a trade that I'm going to put on every single day, I want to know how it works. I want to be comfortable with what's happening behind the scenes. So it looks like I got some more work to do on this backtest, and I'll leave you with that. And stay tuned. I'll give some updates in the future.